All right, so here's an update to the Bitcoin situation. We posted a video first thing this morning when Bitcoin was selling off and before the markets in the US had opened so we could see which direction the stocks were going to push it. We mentioned that futures were already negative, and worse than that was the fact that we had escalation with the war in Ukraine and Russia doing an airstrike. I mean, really kind of seen that coming if you were paying attention over the weekend to the bombing of the bridge going into Crimea, and then Putin saying that he had to probably definitely do something in retaliation to that. So we kind of were prepping people for the idea that we were probably going to push down. However, we wanted to keep an open mind and we wanted to just give people the information as it comes. So, first thing this morning, what we told people was what we saw before we had this secondary line. Maybe I shouldn't even put this in yet, but on the last video, we put this line right here and we said, look, earlier in the weekend, we were telling people this was your range. You had dropped down into this range where you had found some sort of support in the 19,350, 375 kind of range is what it had become. And we were using that as support, bouncing back up, but we could not break into the 19,600 really. And I continued to tell people that the bears were walking us down. The Bears were winning. They were pushing the Bulls down. And we were really getting to a point that what I saw was that they had kind of drawn a line in the sand to where we were then getting to where we couldn't even get up past 19,550 basically. And I saw that continuing to get worse. When I later started reporting, I said that what I saw coming was them really trying to work on continuing to box the Bulls in, walk them down level by level, and that I expected us to lose the 19,500 range. And I also told people if you were, trading on lower time frames and you were trying to scalp this with large positions or high leverage with smaller equity, then what you were basically looking for was, buying at the lows of the 19.4. If you got lucky, you hit just below 19.4 and we're sometimes grabbing at like 19,375, 19,385, stuff like that. And then you were selling in the 19,000, 525, 550, depending on where you could get. And like I said, it just kept getting walked down. One of the final videos I made over the weekend was I had mentioned on the lower time frames what we were seeing was, or what I was seeing was that we were literally starting to get to where we had hit 19,497, 499, and boom, bears would step right in with force and they would aggressively push back down. And I just mentioned very clearly that the bears were walking this down and they were taking it level by level in a very methodical play. Moving forward after the sell off this morning, that was a nice big play by the Bears. The next support was found. The lowest wick went to basically 19,100. We immediately started rallying back up, and I think a lot of people were starting to ape in. We jumped in the stream, I don't know, somewhere right around here at about 4:30 to 5:15 a.m., something like that. And it started looking like we were, pushing back up into here. And I had not drawn this red line yet. And we were starting to come back up and push up into here. And most people were probably figuring, reclaim the 19.4 floor and go back to bouncing within this trend. We told people that what we were looking at here is I thought and felt that this level was going to become a line in the sand for the Bears. If I was looking at it from a tactical and strategical point of view, I would figure the Bears would start waking up, or the ones in different time zones that were, still pushing in late hours and working hard, they would start using these pops above here as fuel. They would use it as more fuel to push you more down, increase their gains, and just increase the flow. And once you start cascading things, the momentum builds. Sadly, I was right. As I tell you guys all the time, I prefer to be more of a bull than a bear, or I prefer to help sell a bull thesis and or work for the bulls. I've never been a very good bear. I have a hard time shorting things, especially down in these levels where I feel that there's far more possible upside once things were to get rolling than there is downside. However, that doesn't mean that you couldn't be shorting with tight stop losses right above. That's definitely a play to make and something that I do at times. However, as I was being honest and saying, I'm just not naturally a bear mentality person, regardless if I see it or not. I mean, obviously, I was saying that these were liquidity grabs and I should have, I myself been shorting right here, but instead I focus on trying to make the analysis and share things to, other platforms to help other bears not ape in, make bad moves, and, get wrecked and liquidated, basically. So moving forward, what did happen is they did use this as liquidity. They did make a strong push down, and when the bulls tried to step back in, they did draw that line in the sand that I saw coming. 19.4 is now a line in the sand, and they are once again pulling level by level and walking the bulls back down. They're going to put the bulls in a pin, if you will. So they've turned this into a bear trap situation anytime anybody starts to think they're getting too carried away with momentum. What I see happening here moving forward, sorry, strategically play by play, if I was trying to say what they should be doing here. When you look back before, when we were looking at this channel over the weekend as being our support, the deepest wicks would come down into the 19,000 370 range was pretty common right here. You started to have this range where if you were buying between like 19,360 and 19,390, that was like the golden zone all of a sudden for this weekend trading to get the extra gains, because then up here there was this floor right above it, another $25 to $50 up, and that was consistently bouncing up to the 19.5 range, basically about $100 move. It was just you're trading within a very tight range. I mean, you were lucky to get it to be over $100 of a play each way, and it was not consistent. A lot of times you would stay in here and you would be just within that $100 range. Every now and then you could get lucky, get something a little lower, a little higher, and make those plays. Moving forward, what I saw happening and what I'm seeing happening now is what used to be this golden zone box is now going to be the box they want to defend the most, and they're going to continue to try to walk down from there. So I've drawn this next line, and I believe that, this is something you're going to start seeing as an issue. And you see a few wicks here wicked into this golden zone box, but the bodies of these candles are literally either right below or right in this line I've got at like 19,366 to cover that range I was explaining between the 19,360 and say 19,390, that $30 range. This is now going to be temporary resistance in a major way throughout this play today. And with nothing but bad news coming out of the stock market, the S&P is dropping. Looking at other charts around me, and I'm seeing NASDAQ, S&P falling, and things are getting nothing but worse out there. With that kind of narrative and that kind of mood in the markets, this is going to be a situation where the bears are in control, and you need to, if you're not looking to short, you need to be careful. You will get these short plays from these levels when they come down and create them right back up to these resistance lines. I'll post another video in a little bit as things progress, but what I'm expecting is they will end up getting you down to not just taking this 19.3, but then they're going to walk you down and make the lower ends of it turn into resistance next. That's kind of what I see going. Probably do some liquidity grabs up into this area, maybe even get some wicks up, but without a major change in the market or a rebound in the S&P and the NASDAQ for momentum, then this is the play I'd be watching for, is that this is going to become the bears golden zone to take the top of the shorts and continue walking you down. The next level they'll grab will basically probably be another $100 below that for this time being. If we get some stronger, worse news to come out, or if we get a larger pullback in the S&P and the NASDAQ, if say today ends up being the day that we lose the 360 range on the S&P, 3600 if you want to call it, if you're trading ETF, it's just 360. If we lose that range and we drop down to some of those levels that I talked about the week prior, which is, 3575 was where we found support prior, but any real support below that is going to be, an immediate drop to the 3400 range. And then, below that, if you go back and look past the money printer running, the S&P and the NASDAQ, and talking about the S&P, you could see that thing down at 28 to 3,200, 3,000, 3,200, 31, 33. I mean, all these different ranges are open for the taking at this point, depending on how much worse the news can get. And then also remember, we're starting the week on a bad note when I was hoping we would at least get some sort of relief rally after all of the oversold positions and selling going into last week and closing out last week. We already know we have Fed meetings Wednesday, Thursday, Friday. We have important CPI reports, FOMC reports, jobs reports, a lot of things that are going to weigh on markets heavily. And I don't see a lot of reasons why most of those should look any better yet. So we were already hoping that we would get some relief Monday, Tuesday, but I had mentioned that people would be intelligent, aggressively taking profits on those positions, because Wednesday, Thursday, Friday was a whole nother can of worms and a very good chance we would see more pressure to the downside. The fact that we're already getting this sell-off now, if we then continue into really bad news Wednesday, Thursday, Friday, just consider more downside. I mean, this is just continuing to get worse. And the positive to it, though, is, as I stated in another video and posted some comments on Twitter and whatnot, at least if we did do this way this week, and what I mean by this way, sorry if that was confusing, is if we started off the week bad, plus then went into bad news from, Wednesday, Thursday, Friday reports continuing to come in too hot and giving more ammo to the bears to push down further in the entire markets globally, then what you could get out of this from a more positive side is that instead of trading sideways for so much longer, we could really get some dramatic selling and maybe try to find an actual bottom and start creating a base here in the S&P and the NASDAQ, which obviously, crypto and Bitcoin are still moving with those simultaneously. So you need the markets moving positive at this point to get Bitcoin and the rest of the crypto markets to move positive. We have yet to decouple from the traditional markets. So as of right now, your Bitcoin, your crypto, your Ethereum, all of them, they're moving with the markets. You might have some lesser coins that, are not as, popular, not as, I don't know, not as, I want to say the SH word, but I'm not sure where that'll go on a video. So, those coins that are not the good ones. So you'll get some scams in those. You'll get those pumping. Things like that'll happen during times like this. But a lot of that is just pump and dump basically. Anything that's got any real value is going to move with the markets. If the S&P and the NASDAQ are going down, most major cryptos are going to follow, and they're going to follow Bitcoin and Ethereum. Even most of your altcoins follow Ethereum pretty specifically. So if Ethereum's following, the S&P and the NASDAQ, and the another good one to watch is the tech ETF. That's another one that it's very highly correlated with. So with those things selling off, continue to plan on more sell pressure. If you're someone looking for a longer term horizon, or you're not trying to day trade this, you're not trying to scalp this, you're literally just wondering, hey, where do I buy an extra, 100, 1,000, 10,000 for the future of my family, whatever it is. All of these prices below 20,000 are amazing. Anything below 19.5, even better. If you're wondering, where you can try to look with some real hopium as to, getting these great bottom buys, we've got a real base in the, say, 18.5 to 19.1 range. From 18,500 so far to about 19,100 is a really strong base. If you see it down there at all. I mean, we're basically there for someone looking at a long-term horizon. 19,265. Just buy it. Just buy it and forget about it for 18 to 36 months, and you won't regret it. So depending on what your time horizon is and what you're trying to do, there's different plays to be made here. If people have specific questions or needs, or want to throw something in the comments, I have no problem making a video more specific to a certain idea of a topic or a certain time frame. However, for right now, I'm trying to give people updates on lower time frames who are actually trying to trade, while then also stepping back and giving them the larger overall outlook of where you're at if you're trading for a few months or even a few years out. So as of right now, I would continue to watch the Bears, and they continue to take control. And as of right now, they're making that move I was talking about. We are losing the 19,300 level. They are going to come over here and, in my opinion, turn this range right here. This is now resistance. We're being walked down about $100 at a time on the Bitcoin value. So continue to expect this to go down. Now, here's where there's a very good chance, unless things get much crazier today, that instead of being your red line, this could be looked at as a green line. This could be looked at as maybe a place to start buying, even if you're on a shorter, horizon. You're saying, oh, I just want to, trade this today, trade this, tomorrow, trade this for the week. There's a very good chance we get a good support right here for at least the next couple hours going into today, and get a bounce back to this 19,300. I would not expect that if we go all the way down to this 19.1, then all of a sudden we've also lost 19.2 immediately. They pushed this down right now. I mean, we're on a 15-minute candle, so these things are happening right now. You see this come down, me personally, I mean, obviously not financial advice, educational purposes only, but for me, I'm starting to buy more right here, even on my day trading positions. And I'm going to look to scalp this back up to this range right here where I say there's resistance. We're going to come back up and, test that. That's my theory, my idea, my thesis. So if you're looking to, buy on a longer term horizon, buy now. It's a great price. If you're looking to trade this right now, these are your levels. If you're looking to just try to figure out where you try to get that best buying opportunity of the week, I think that you can get buys between 18.5 and 19.1. If you're not someone who has time to pay much attention to this and you just wanted to ladder in a bunch of buys, what you could do is take whatever amount you have and break it up into 10%. Even if it's just $100, you could set a buy for $10 at 19,200, and then another one at 19,100, and then 19,000 even, 18,900. I think you get what I'm saying there. If you're looking to buy something a little bit larger, you have $1,000, you could do the same thing. You could ladder those in hundreds, or ladder them in a little bit further apart in 250 at a time. Place one at 19,200. I think we come down here and at least hit this for a second today. So you could have your first buy at 19,200, drop down, have one at 19,150 maybe, just because that might actually hold as its own little line for right now, and then ladder them in below that just in case. I mean, overall, we're still in a downtrend. This is continuing to downtrend, and when you zoom out and look at this on a higher time frame, all of this was created by the pump in the markets, the pump in the stocks. That was a relief rally. And really, we're just getting back down to the reality that we already had before that. And technically, we're still just above these levels we already had. Zoom back a little bit further, and you see we were dipping into these levels. And you could very well see getting back here, you go back towards, the 26th of last month and the week prior to that, all the way back, towards 19th or so of last month, we were having trouble with these lines already. And once we got above them because of the stock market, once the stock market lost that momentum, like I said, we're following that. So if you want to know where you could really be looking at, zoom out, you look at what was going on a month ago, buys at 18.2 are happening. you were grabbing those, and then maybe there's another level here at 18.8 that maybe now becomes an actual support. But also remember, we're talking about possibly making new lows, new 52-week lows on the S&P and the Nasdaq if things continue to get worse this week. We're testing those lines right now. I mean, I'm watching it on other screens as I glance around, and Nasdaq, S&P, bears seem to be in control. And as I keep saying, crypto